It's March 1932, Wall Street is a ghost town. Headlines scream doom. Investors flee as the Dow Jones tumbles to its darkest lows. Yet amidst the chaos, an odd pattern is emerging, one that Russell Napier calls the anatomy of a bear. What if the very despair flooding newspapers, the very hysteria of the crowd, is the signal that a historic market bottom is near? Let's unravel how to read these signs before the next bull roars. Napier digs into over 70,000 Wall Street Journal articles during deep bear markets to decode the truth hiding in headlines. What can frantic news tell us about the market bottom? In 1982, Napier found headlines like "Stocks Face Long Winter," echoing despair from the 1932 crash. Ironically, this perfect storm of negativity coincided with one of history's best buying points. When desperation hits newspapers, it often means the smartest players are stepping back in quietly. Imagine a crowded theater where suddenly half the audience rushes for the exit. During these bear markets, retail investors, the noisy crowd, fold first. This leaves value hunters behind, like hunters waiting patiently in the trees while everyone else runs. The absence of everyday investors creates a vacuum where prices hit rock bottom. The news media acts like a fog machine, thickening the confusion and fear. Napier shows us that relentless negative stories aren't just reporting. They're almost part of the market's machinery, solidifying panic and driving prices lower before they reverse. This dark cloud in headlines is paradoxically a lighthouse to patient investors. Why do so many professionals fail to spot bear market bottoms? Because the signals are counterintuitive and buried in history's forgotten details. Back in 1921, the market was almost universally dismissed by experts as doomed. Yet, in hindsight, it marked a tremendous turning point. Napier's deep dive shows expert opinion was clouded by lingering memories of post-WWI recession, blinding them to the emerging bull. The 1949 bottom landed amid heavy economic uncertainty and talk of another recession. Most investors harbored doubt, missing the rally hot on the heels of World War II's end. Napier likens this to missing a train because you're watching for a storm that never comes. In 1982, rampant inflation terrified the market, convincing experts it was too early to trust the rally. But does waiting forever for perfect conditions leave money on the table? Napier's work reminds us that markets often climb walls of worry, ignoring current fears entirely. So how do you apply these historic patterns to catch the next big buying moment? Napier offers a financial field guide built from the real bones of bear markets. Sentiment is the heartbeat Napier tracks. When newspapers, investors, and analysts share stories of despair with no end in sight, this signals that selling exhaustion is near. It's like a volcano before eruption, quiet but intensely charged below the surface. Think of price and fundamentals like dance partners. In a bear market bottom, they fall out of step. Price plunges far below economic reality. Napier likens this to a rubber band stretched taut. Eventually, it snaps back, dragging prices higher in a swift rebound. Value hides where everyone else sees only risk. During these lows, the strongest companies trade cheaply because gloom blinds the market. Recognizing value here is like spotting diamonds in the rough. Napier's guide teaches you to train your eyes to see past the gloom and buy when few dare. Remember that ghost town Wall Street in 1932 from the start? Those empty floors and shouting headlines? Napier shows us that bear markets aren't just crashes, they're hidden opportunities waiting for those who listen carefully. Next time fears flood your newsfeed, try this. Pause, read between the lines, and ask yourself if the worst is already priced in. Often, that's when your best entry awaits. Subscribe for more book summaries like this one.